So we, as a Digital Currency Group, my company, we've invested in 145 companies now. And so we're the most active investor in the space. And so we have pretty good visibility and insight into kind of what's working and what's not working. And I continue to believe that the number one use case is speculation right now. And that is not a bad thing in that, one, like I think Bitcoin is going to, controversial opinion here, is going to displace gold over the next couple decades in terms of the role that gold plays in a portfolio.
We will come back to that.
Yes, I'm sure we will. But separate from kind of the store of value kind of gold play, I think that in order for Bitcoin and digital currency to provide the utility that people are excited about from a cross-border payment perspective, remittance perspective, all the friction that could be eliminated by the free movement of money around the world, it's not possible unless the asset class, the size of the asset class is larger, unless there's more volume and velocity in the on-ramps and the off-ramps. So initially, the number one use case is speculation. As the market cap grows, you have more liquidity going in and out of different fiat currencies, and eventually you'll have the ability to operate, as an individual or as a business, exclusively in Bitcoin and digital currency, and completely eliminate or bypass the middleman and all the friction, all the cost. But none of that becomes possible. You can't create a better financial system that eliminates all the friction and middlemen when you only have a $125 billion asset class that trades $5 billion a day. It's just not big enough.
So, and that's an interesting point. So you think that speculation is one of the good ways to build the
It's the only way. It's the enabler. It's the flywheel effect. It has to grow in value, and as it grows in value, it becomes more interesting as a tradable asset. And as it becomes more interesting as a tradable asset, you get the derivatives, and you get the futures, and you get the infrastructure, and then you have the liquidity.
But the argument is what are you trading then? I guess the answer is you're trading a future operability or something. You're trading the future use case, I guess.
It was really kind of it's two things. One is if you buy into my hypothesis that Bitcoin is going to displace gold, so you're trading into an opportunity. So there's 8 trillion of gold, and then there's 125 billion of Bitcoin. So that's one play, and the other is you're betting on the innovation. You're betting on the technology. You're betting on the community. You're betting on this new financial system that is going to get built over the next couple of decades. And that investment thesis is it's a different analysis. The gold analysis is, okay, what is the probability that it captures some of 8 trillion? And then you discount that back and you say, okay, it's going to 5% chance it's going to happen, that it's going to capture 25%. You could do the math, it's still a big number. Whereas if Bitcoin becomes the underpinnings of the new financial system, all of the value that gets tied up in Bitcoin as it's moving around the pipes, it's kind of like a working capital analysis. And so if there's 5 or 10 or $100 billion tied up in the Bitcoin system as it's being used for all these use cases, you can make some assumption as to what the value of the asset class would be at that point. And that's not even valuing the blockchain use cases, using the database for, recording ownership around, digital rights and identity and all the crazy ideas that we've invested in and you've heard about.
So can you think therefore of Bitcoin, thinking through your idea with gold and other areas, is you need to think of it in terms of option value. What is the probability of it ending up replacing gold? And then trying to impute that. My guess is you could probably apply some sort of option pricing model and come up with some fair value, whatever that means.
Right, and the small changes in your assumptions have a pretty meaningful impact on the outcome. And look, and that's why Bitcoin will move up or down 5 or 10% in a week, because the very small changes in money flows, very small changes in perception changes kind of the probability of that ultimate outcome. And so again, with gold as the in my opinion, kind of the number one use case, or digital gold, 8 trillion relative to 125 billion. I mean, for you to double your money in gold over the next couple decades, it's essentially it's a bet against the dollar. I mean, it's a bet against kind of fiat currency. It's certainly my belief that Bitcoin would perform well in that environment, but really more importantly, if the world doesn't fall apart and if the value of fiat and the US dollar doesn't collapse, Bitcoin could and should still perform really, really well because you're investing in this new financial system, this technology, this community, this restructuring and rebuilding of the way that value moves around the world. And gold is never going to have more utility. It's never going to. It's just going to or not be perceived as this store of value that you put in your portfolio that would perform well in periods of financial dislocation.
There used to be people used to trade the gold-silver ratio for a long time. And one of the reasons why silver often outperforms in certain times is because it has two values. One is the precious metal value, and the other is the industrial value, because people use silver for a lot of stuff. And you kind of think of Bitcoin in the same way. Absolutely. It should hyper outperform in that kind of magic scenario of devaluation of fiat currency, which probably at the end of the next recession we're going to see some format of, but also it has to price in the optionality of the future financial system, which as you go into recession and you get to more extreme monetary policy, the probability explodes of having to choose a different outcome.
That's a super smart way to look at it. That's absolutely right.